Hello everybody. Welcome to our webinar today here. We'll give it a couple more seconds and we'll get rolling as the last few people come in. Thanks for being with me. Today we're going to talk about a couple of the products from Sagicor that you've been hearing a lot about whenever you call into our office here, or maybe in some of the other pieces we've been marketing. There's two key products I want to focus on today. And let me get rolling here. I think we got about everybody in tow. Let me see. Yeah, here we go. We're going to first start talking about the Sagicor Fixed Index Single Premium Whole Life. That's their life product with the living benefit rider embedded. And it's one of the hottest things on the market in the class of single premium whole life. This product has the strongest rider out there, and I'll get into that in a little bit. But one background piece I wanted to touch on, and you maybe have seen this before on some of the other stuff. They're really, this is according to Rasmussen reports a few months ago. You can see all kinds of marketing information or public information about this kind of thing. There's a lot of concern out there about how are we going to pay for our medical bills and such when we get older. And as you see here, 35% according to Rasmussen are confident that Medicare will be able to do that for us. So that leaves us with other options: self-insuring, using our own resources, or getting standalone. Or let's talk about the product we're here to see today. And the key question that's going to lead into that is, what if you could immediately double your client's money after tax? And that would be using the leverage of the single premium product. And here, this one from Sagicor has the immediate 10% premium bonus, guaranteed death benefit, cash value growth, all those things. One of the things I wanted to get into today, and let me see if I can do this without too much trouble here, is I wanted to get onto my desktop so I can show you this piece. Here we go. When you call my office and we talk to you about the Sagicor Fixed Index Single Premium Whole Life, you're going to probably get this piece from us here. This is the quick view on the product. Okay, I see it just popped up. Now, it's probably a little bit too small and a little bit too busy to look at too much here on the webinar format. But this gives the product highlights: the 10% premium bonus, the issue ages, the details on how the index crediting works, and so forth. What I think is going to help us take a better look at that today, rather than the quick view piece, which is very useful when you're sitting at your own desktop. What's going to be more useful for us today here is if we look at the illustration. Okay, so I've queued up the meat of the illustration here, and this is going to show us how the product really works, how the money works when you get in there. Now let me expand this a little bit. I got a one-man show today here, so everybody feel free to type in questions. I will promise you I will either get to those on today's webinar or we'll follow up with you. Questions about state availability and such, go ahead and let us know. We'll keep you updated on all that. They're pretty widely available. I think this product here is in about 35 states, with a couple of the sister products available in a few more. But hopefully everybody can see this. I'm going to go to a little bit of a highlighter here so I can show you a few things that I think are really relevant. Let's see, we got a sample here. We got a female 65, non-tobacco. You have options on how you would like to credit. We're using a $100,000 premium, for example, on this one. You can allocate it between whichever one of the three strategies, or whatever mix of the three strategies you like. There's this declared rate that's paying 3.5% right now. We have a S&P point-to-point that's paying 4.35 right now. That's a historical with a 7% cap. And then the global mixed basket, which as you can see here is the best performer. I don't know if my highlighter is coming across to you guys very well. I got a little audience view they show me, so it looks to me like I'm highlighting this for you. But these are real historical numbers based on current caps. So just for illustration purposes here, I used 100% in the global basket because that has been returning best. The key thing to look at here, if this female client puts $100,000 in, her day one with premium bonus, with the 10% bonus, is going to give $110,000 into the product. As you can see, the guaranteed values are always, cash surrender value is always going to be at least that $100,000 she put in. Over time, that even on the guaranteed side, if you notice here, after 9-10 years, on the guaranteed side, the cash value will grow regardless of any index crediting. Her death benefit is going to be, and there's several actuarial formulas overlapping here. So as you can see, the death benefit is going to decline a little bit, and on the guaranteed side, it's eventually going to rest there at that $186,000 and change. So it will never go below that. This is whole life insurance, guaranteed cash value, guaranteed death benefit. Now here on the current values, now this is not an overly optimistic assumption that you see on some types. Generally in some indexed ULs, there's been a lot of conjecture that people are maybe getting a little bit over aggressive in projecting maybe a 10, 12, 14% rate of return on an S&P point to point. These are using real historical values with current caps and current par values. You can see that although we don't have real significant growth in the early years, eventually this death benefit does start to drive higher. Let me close out my highlighter for a second here so I can pan down just a little bit for you guys. And you can see after about 15 years or so of the contract, the death benefit with historical values, with basically we've had flat markets for the last 10 or 15 years. We've had volatile markets, but they haven't really trended higher. You can see with those with historical values, the death benefit will tend higher here. Now, the key column is this far right column. This is the cash illness benefit. This is triggered on 2 of 6 ADLs, and I think I've sent a lot of you folks, and I've used on other displays here exactly how the cash illness benefit is triggered. It's a one-page form that the insured's doctor needs to fill out, indicating that as the insured is sitting in front of the doctor, they need substantial assistance with 2 of 6 ADLs. This is not permanent disability, this isn't nursing home, and this isn't for billed services. This is a cash benefit. Once triggered, because your doctor will sign the claim form, and it's processed by Sagicor, and we've had a number of these processed. This product's been out on the market for about 4.5, 5 years, and we've had some of our clients trigger this illness benefit, and I don't remember having one declined. I don't remember a lot of them being triggered in the first 4 or 5 years of the contract, but it's a very, very simple trigger, and that is the real power of this contract. There's a lot of single pay whole lives out on the market these days. Some of them have some of the bells and whistles here, like the guaranteed return of premium. There are other contracts out there that will guarantee that you will always have your $100,000 back. On a whole life contract, generally speaking, you're going to see guaranteed cash value growth eventually, just because of the statutory requirements on whole life. So you'll see that from time to time. What you're not going to see on any other product on the market is the guaranteed cash illness benefit with a trigger like 2 of 6 ADLs as a current disability, not permanent disability, and a cash benefit. Okay, I think I probably hit that enough for us all. Again, go ahead, type in any questions. I see a couple coming in, and for now we'll just kind of suffice to save some of those till the end. And I will move along here. That's pretty much the highlight on the single pay whole life. Now this is one of our niches here at SilverSide. So you've probably seen some of these illustrations out of your marketer here before, or maybe on a different webinar we've done. But there is the power of the of the contract. There's nothing out there that's going to beat this across the board. And I'm going to see if I can move along here on my slideshow a little bit. I kind of panning back and forth between my slides and my my desktop. We will move on real quick. I don't want to take everybody's entire morning. I'm going to talk about the annuity a little bit here. And as we know, in the annuity market these days, with the very low rates that we've seen compared to historical, we're not seeing the 10% premium bonuses and the guaranteed 4% fixed buckets and the 7-8% S&P caps. We're seeing very low crediting rates due to the low interest rate market in general. And one of the big detractions from an indexed annuity, at least as far as you hear from the pundits, is it ties your money up for a long time, 10, 12, 14 years. So what we've seen lately is a lot of the new designs have gone to income rider designs to use some pooled risk features to allow to enhance what kind of value we can show folks on their indexed annuities. But the one big problem we have with that is we realize that historically we've been saying 80 to 90% of people don't take income off of a annuity. They're using it for tax deferral, not for income. So again, the question there is, what if you could offer an indexed annuity without an income rider? And Sagicor has one. A lot of the folks on this webinar I know have been working with this. And here's a couple of the highlights, and I'm going to do a similar thing here. I'm going to pan over to an illustration in a moment, because this particular annuity from Sagicor, they do have a company illustrator, so you can show a client exactly how their money is going to work. But the highlights are basically 5% premium bonus. This is on a 9-year chassis. It has the typical 10% penalty-free withdrawal feature that you see in most good annuities these days. But the key to this one is the Sagicor product. If you don't use the 10% on a year-to-year basis, it accumulates for you up to 50%. So at the end of year 5, if you haven't taken any other withdrawals, you're allowed to take up to 50% penalty-free. And then there's a minimum guarantee across the board. This is another very unique feature on an indexed annuity these days. You see, your indexed annuities generally are going to have some kind of a guarantee, but it's often 1% on 87.5%, 1.5% on 87.5%. It's really kind of a math feature that negates itself. But on this particular one, 2% overall guarantee on 100% of premium. So if you use the S&P strategy that's currently capped at 4 S&P point-to-point, and a 4 cap is very competitive right now. It wasn't maybe 3 or 4 years ago, but now it's very competitive. If you use the S&P strategy and it doesn't pan out for you, over the life of the contract, they will guarantee this 2% regardless. Okay, enough of that. Let's take a quick look at an illustration there. And I'm going to show you real quick, just so you will, when you get it out of my office, when one of the marketers shoots this over to you, you can see a quick view. This is, again, a similar piece to what we had on the single pay life. And I imagine that you guys probably can't see that real well on the other side of a webinar here, but it gives the product highlights and And that's something that can be a useful tool for you. But what will probably be more useful for us all right now is if I pan over to the illustration real quick here. Similar deal, but the key thing to look at here is the far right column, where you can see on a guaranteed basis, and this is going to be a feature regardless of which crediting strategy you use, whether you're going to use the declared rate, the S&P point-to-point with the 4 cap, or they have the same mixed global strategy that we had over there on the life product. But regardless of which strategy you use, you see the guaranteed side. After year 2, you have a guaranteed positive walkaway value. So this addressing some of the concerns we talked about here in indexed annuity in this day and age. Low crediting and ties your money up. Well, the crediting's really very, very competitive. Compared to a couple years ago, it might not have been what we'd like to see, but in this day and age, a 2% overall guarantee, a 4% S&P point-to-point cap, and a global strategy that actually outperforms the 4% is very competitive crediting, and this is the most liquid indexed annuity you're going to find out there. Positive value after 2 years, 50% cumulative free withdrawal. So that's really a series of features there that are tough to beat. We're seeing a lot of sales in this product right now. And we're talking with the folks at Sagicor on a daily basis, and they're intending on moving forward with this. And we've all kind of fallen into that trap here in the last couple of years. We find a product we like, and we get ramped up and we're selling it, we're getting our clients interested in it, and the next thing you know, well, they're not holding it on the market. And I don't have a crystal ball here. I'm not sure. I can't speak to what Sagicor is going to be able to do in 6 months or a year from now, but they assure me that for the time being, they have no intentions of making any major moves on this product. So those are the two things that we're really working on here that we're seeing a lot of sales in. One thing I need to mention too on the index, now I see a couple questions coming in about qualified money, and that's one of the key things. On the single premium product, you can't put qualified money into a single premium whole life contract. What we do is there's a sister product to this, is a 7-pay whole life. Has very similar features, has the exact same crediting, but you systematically fund it with 7 level payments, and in that way you could move qualified money without taking a lump sum tax hit. You could move qualified money over 7 years and spread out your tax liability over that range and not blow yourself up into max tax bracket and those kind of things. So don't forget about the 7-pay we like to use for qualified money. If you have a lump sum non-qualified, you want to use the single pay version, because that's going to give you this 10% premium bonus, and that's going to drive your values a little bit better for you. So if you have the lump sum available, use the 7-pay. If you're using use the single pay. If you're using qualified money, you may be better off considering the 7-pay. That's going to depend a lot on what your tax situation is and such. So I'm going to field a couple of questions here. I got questions about the crediting, about the caps I talked about, and I see one here too about the par rate. What we're looking at on the annuity, they actually have those, the 20% global participation rate. Let me pan back to that real quick because I see 2 or 3 questions about that. These are actually, they have these resting on the contractual minimums. 4% is contractually on renewal, or by the way the entire product is filed. That's the minimum cap on this product. So they're not going to give you a 4% first year cap and come back year 2 and say, hey, your cap for years 2 and moving forward is 2.5 or something like that. That's the contractual minimum. And if you look at the quick view, and I don't know if we're going to be able to see that very well here on the webinar, here, minimum cap is 4%, right there. If you guys can see that, but that's one of the embedded features. And actually, the global participation rate at 20%, that is the contractual minimum too. So they won't be lowering that on you. There is, if people who get into reading the fine print, and this has come up a couple times, they can invoke a cap on the global in addition to par rates. They have that embedded in the contracts, but by company practice they have not used that, and they don't consider that material at this point. But contractually, don't be shocked when you use your back and you see that is in there. So that is something that that we can get into more detail with you, and I can get you on the phone with the Sagicor senior marketing people if that's something you really have a big concern about. But generally speaking, if you're if you're using the global strategy and they come out and they say, okay, we're going to go with both moving parts, we're going to go with the par rate and the cap, I would say maybe you just moving forward, reallocating years 2 and beyond, maybe you say I'm going to use the S&P strategy with the 4% cap and no par rate. So that would probably be where you want to go with that. And again, I got questions here about state availability. Pretty widespread. As always, New York is a no-go on all of this. Some of the Northeast states are pretty tricky. We have gotten a few more states approved recently for the annuity. The annuity is available in the state of Oregon, and a lot of the other states that have been tricky about approving, the non-compact states that don't have a lot of bonus products available, we have gotten the single pay life available in, and even some of those where we haven't been able to get the single pay, the bonus single pay life in, we've gotten, there's a non-bonus version they call the interest sensitive. It doesn't have quite as many bells and whistles, but it still has that same great illness rider, which is really the power of the product. That's available in several other states as well, and then the 7-pay has pretty widespread availability. So any specifics, I will after the webinar here, any of you guys typing in specific state availability questions, I'll handle those one-on-one with you. And let's see, what do we got? How long is the monthly payout for the 2 ADLs? That's going to give you, and I'll get back to the illustration on that. I think that'll help too. You see, yeah, the monthly chronic illness benefit, how they calculate that is that's basically 3% per month of the death benefit. When you trigger it, whatever the death benefit is upon triggering of the illness benefit is 3% per month. Now what they do is they subtract $25,000 from the death benefit, and that is a residual death benefit that is payable on death, but they don't calculate that into how much they're going to pay you monthly. They'll pay you 3% of the rest. The death benefit minus 25% or $25,000 for 33 months. So the 3% for 33 months will deplete all but $25,000 of that death benefit, and that will be payable upon death. And this is generally considered to be a tax-free benefit. We don't like to get into a lot of tax law here, but with all the per diem and all those numbers that the IRS throws out, the chronic illness benefit that's going to cap out at $250,000, so it's going to come out to be about $7,600 a month is the max monthly chronic illness benefit you're going to get out of this. That is going to fall within the IRS's acceptable standards for per diem. And again, I'm not a tax expert, as you can tell how I'm mumbling about this, but that is generally considered to be a tax-free benefit. You won't get a 1099 on it, and there is generally going to be no requirement to report that. You're going to get a monthly check for 3% per month. So the value you see there is what it will be upon trigger. So I got a couple follow-up questions. I'd be happy to talk with anybody on the phone if I haven't somehow gotten clear enough there. Can you currently disability? I got a couple other questions here. current disability to trigger the chronic illness benefit. Once again, I will shoot over to everybody. I've probably, most of you guys might have it already, the actual claim form that when after your client, after year one, when the chronic illness benefit becomes available, your client can go to their physician, and it's a one-page piece. Basically, the physician needs to verify that they've examined the policyholder and that they deem them not able to perform 2 of 6 ADLs without substantial assistance at that time. Simplest trigger you're going to find. I'd be happy to get into that in detail with anybody on the phone as well. I think we've got most of the specific questions. Let's see here. Okay, we did not get into underwriting. I see 2 or 3 people asking about that. And before I do that, I see one other question. Good question here. What if your expenses are less than what the chronic illness benefit is? Sagicor is not going to get involved in that. If your monthly chronic illness benefit is, let's say right here, after year 4, you fall down and you break your hip, you go to your doctor and your doctor says, yeah, you're going to be laid up for a while here. I'm going to fill out this form and trigger it for you. You're going to get a check for $5,035 a month in cash from Sagicor for the next 33 months. And what you spend that on, what your client spends that on, is not of Sagicor's concern. So you spend that on whatever you think you need to. I hope that clears that. That's about as simple as it's going to get in this business. If you spend $2,000 to keep yourself up while you're sick, and the other $3,035 you go on a cruise with, I don't think anybody, there's never going to be any reckoning on exactly what that is. Yes, the illness benefit is available after year 1, so beginning the 13th month, yes, it would be available. Had a couple questions here about underwriting. Thank you guys for those. I probably should have gotten into that a little bit more. Let's go back to the quick view. Sorry, I hesitate to use this too much. I'm not sure what it says here specifically. This is a simplified issue to Table 4 as standard. There's only 2 rate classes on this thing. It's either tobacco or non-tobacco. Other than that, everybody gets the same rate. If you qualify as a Table 4 or better off of the application and phone interview, you get the benefits we've highlighted over here. You get the full value of cash surrender value, death benefit, illness benefit. And as a Table 4, we've been working with these guys for 4 or 5 years on this again. We've gotten a lot of people approved who've had some diabetes, blood pressure. They're going to want to see that those are controlled to a reasonable level. We've had some stroke and heart attack victims that we've gotten approved, but generally they're going to want to see a 3 or 4 year track record of recovery from those. If you've had a stroke, heart attack, internal cancer, or uncontrolled diabetes in the last year or 2, you're not going to be able to qualify. You're going to have to wait, hopefully if your health improves. The one thing too, when you present this to a client who's maybe, I'm showing you here, female age 65, if your client says, well, yeah, this is something maybe we need to think about doing. We do have some money set aside for health emergencies that if we don't need to use for health emergencies, we'd like to see to go to our kids, grandkids, whoever. So maybe we need to think about this. Well, you need to press your client. You need to say, if you're pretty sure this is something you're interested in, we should do it now. We should do it before you have another birthday and your leveraging is going to go down a little bit. If you're 65, you get a guaranteed $186,000. Once you turn 66, your guaranteed minimum death benefit might go down to $181,000. Also, you don't want to wait until health starts to become a concern. You want to get this before you need it. While your health is good is the time to buy life insurance and to buy insurance with linked benefits. So that's the thing to look at. I'm reading a couple more questions here. Can you take less than the 3% on the illness benefit? Yeah, we've gone through a lot of the hypotheticals on what you can do when you trigger the illness benefit. What if you don't want the whole thing? Can you turn it off and turn it back on? Yes, they're pretty flexible on all those. To be honest, in the 5 years or so we've been dealing with this, I haven't seen anybody either take less or turn it off and back on. They're pretty flexible with that. If you need to know specifically for a particular client what they'll allow or not allow, let us know. We'll get you the details. We've gone through a lot of those hypotheticals, but we've never really needed a lot of them. So again, I see a few more questions coming, but I hope I'm going to wrap up here, and I'd be happy to talk with anybody or any of the marketers here at SilverSide. Be happy to talk to you about any details you need. So one thing I wanted to point out, we do have, I'm going to move on to some of the perks we're offering at the moment. We have, a lot of you guys have probably seen this, and this might be tricky to see. I'm not even sure. There it is. We have an iPad giveaway for $500,000 in premium by the end of the year. That's in any of our products, at any levels, any of our products. $500,000 in premium. We'll send you a new iPad 3. That's just one of the promos we run. We run several from time to time, and that's one we have going at the moment. One I can tell you about today is this one. And again, I'm keeping my screen here a little bit busy, but it's helping me ping back and forth, so hopefully I'm not driving anybody too crazy with this. Today's webinar, if you're on today's webinar and you give us a $50,000 case by the middle of next month, I'll send you a box of Omaha Steaks. That's in addition to the iPad promo or anything else we may or may not run between now and then. For today's webinar, if you write us a $50,000 case, make sure you call Deborah, email her, tell her you want the 9/26/12 webinar promo, and we'll make sure that in addition to everything else, we will get you a box of Omaha Steaks. Another thing I want to point out, I don't have a piece for you on it. Sagicor just announced they are doing their incentive trip, their agent convention. It's going to be in early 2014. So you've got the rest of this year and all of 2013's production will go towards their trip to the Mayan Riviera in early 2014. I'll have more details on that. They just announced it. They didn't even announce the specific date and details of the trip yet. But I will tell you folks this, I was on Sagicor's last trip, and it was first class. It was really an event to remember, and they did a lot of things for us, so I expect the Mayan Riviera trip to be first class as well. And I hope to see a lot of you folks on it. I plan on being on it. So I'm going to wrap that up. And again, please, everybody, any questions I didn't get to, I will either call you or email you. Have one of the folks here for me to make sure you get what you want. Feel free to call in at any time. That's what we're here for. We work very closely with Sagicor. We're in Scottsdale. They're right down the road from us. They keep us posted. And in fact, I don't have anything I can announce on today's webinar, but they have a couple new product designs that I think are going to fit into everybody's offering, and we'll be hearing more about those by the end of the year. And they're going to be just like the single pay whole life. I expect them to be very innovative and really groundbreaking products here. So let me wrap it up and clean my screen up for you a little bit. Thanks, everybody, for attending today. I know I kind of pinged around and rambled a little bit, but I thought that might be an easier way to get some of the details to you here rather than just showing you bullet point after bullet point on slides. So hopefully that helped, and thank everybody for being with me, and we'll be in touch.